So today, on the show, we take on the best strategies to short the market, how to scale options strategies in large accounts. We ask Tom and Scott for their favorite market metric, and end with a look at today's markets. Our first letter is from Luis, who asks, I'm looking to lean more on the short side this year in my core position. I've been long some vertical put spreads that are $3 to $4 wide in the SPY, around 45 days to expiration. But they don't seem to give me that oomph I'm looking for when the market does take a hit. Excuse me. What option strategies are your go-tos when leaning short? Short skewed strangles, flat out short, ES micro contracts, diagonals. Also, do you tend to take profits at 50%, 21 days to expiration, or do you manage them a bit differently?
First of all,
Oof, I'm done.
There's an awful lot in there.
Yes.
That's about 45 minutes of the show.
You didn't use my version. I cut this down.
Well,
Yeah. Anyway, so Luis, I actually wrote back to Luis and told him that, and I'll just give mine and then Scott can give his. We're always leaning on the short side. I mean, I shouldn't say always. We're always leaning on the short side when the market's wrapped around record highs. I mean, I know we're, 2% off record highs, but that's just basically yesterday's move. So we're usually leaning short. The advantage of a long put vertical, which is what you've been doing, $3 or $4 wide this buy, is that it solves the problem of being able to hold on to a position, because it's a lot easier to hold a long put vertical spread. But just like you said, we don't really buy a lot of long put verticals just because it doesn't give you a lot of oomph. So when I'm getting short the market, and I just got a little short a few minutes before the show started today, I will sell micros or minis in the ES, micros or minis in the NQ, because those are pure short delta. And then I like to sell some naked calls in the SPY. Now, occasionally I'll sell call spreads if it's an individual equity, but in the SPY I prefer selling naked calls. So I'm short some naked calls in the SPY, and I'm short some ES, MES, MNQ, and NQ futures just today, because I think you might see a little, chop later on. Maybe the market holds this rally today, but I don't know. I mean, the good part about today is that gold's up 100 and silver's down 50. So that's the trade we have on in size. But and one last piece, Luis. You always take profits. The challenge with ES futures is that, when do you take profits? And I think that you take profits whenever you get to a number that you're comfortable with. Don't overthink profit taking. Some people take profits at 5 points, 10 handles. Some people want, like today they're up 50 handles, so maybe you're looking to make 20 handles. But it just depends. But you definitely have to take profits. If you're trading futures, you have to take profits.
So my only addition there is the oomph comment, because the oomph comment is the difficult one. The problem, as Tom said, the good thing about trading a long put vertical is that you can hold on to it because you know what your risk is. The problem is you're not getting any oomph. So if you buy a $3 wide put vertical for $1, you can make $2, which is great, but that's not for a really big down move. So for a big down move, you need to make sure that you have pure deltas, which I would agree with Tom. If you're approved for futures, some short deltas with either ES or NQ. If you have the ability, selling some upside calls, I prefer that over buying put spreads, but there's obviously more risk with that. But try to look, if you're looking for the oomph, you need something that's going to keep your delta, so you're not going to lose, you're not going to have gamma that's going to cause you to lose your delta as the position's moving.
Delta is delta. So
Delta's delta.
If you look on platforms, every platform, thanks to the technology we've built over the last 25 years, every platform today has deltas on it. And if your deltas are short, you're short.
Yep.
That's it. I mean, there's no if, ands, or buts. There's no confusion around that. As long as you're on a platform that beta weights your deltas, and that number is short, you're short.
One thing I would be careful of is if you are thinking there's a big down move coming, putting on a strangle would not be my go-to, for the simple reason being, even though you could do a delta neutral or you could do a delta short, sell a closer to the money call, which would be delta short. The problem is, if there is a oomph move and there's a big down move, you're going to start getting long because of your short put. So that would be a trade I would not go to.
Yeah, I'm different from Scott on that, is that I like selling skewed strangles, but sometimes those come back to haunt you, as today it is in Micron for me.
Did you trade any Russell?
No, I didn't trade any Russell. I have just NASDAQ and S&Ps, and I'm long gold, short silver, but unfortunately I'm also a little bit short Micron. I did buy some Netflix pre-market this morning. They missed their earnings last night. And so I bought some Netflix this morning at 81-ish, right around 81 pre-market. It's up to 84 right now, but I already sold it out.
When this split, it was right around 100, wasn't it? A little over 100?
Oh, it was over 100. It was, when it split, it was like 110.
Yeah.
It's down 30% on the year, and it was
From the
down.
split.
Yeah, it was down almost, like 35 or 40% this morning. I thought the 81. It was trading around 80-ish actually, and I had some 79 bids in. It didn't get there. But I just scalped it. But I thought this morning it was a little, I sold some puts in there too on the opening. So it's a small trade. Also bought some bonds yesterday, and so we'll see what happens in the bond market. But, things are heating up a little bit. It's getting a little more interesting in
More
markets.
interesting, yeah.
Yeah.
Well, the market, the way the VIX is trading, nothing's going to happen, because you got cash VIX down $2,
Yep.
which is a huge move, and the /VX, the futures up, down $1.24.
Yeah, the futures didn't move much yesterday. I mean, the VIX is kind of like, it's just, the futures and the cash are just kind of, they're trading right around the same price. Well, no, actually, I take that back. The
future
$2 over.
is $19.10, cash is $18.04.
Yep. Anyway.
Next up, what's
Don't be shy about calling in, too. We need some, good, whack packers and some, there's plenty of nutcases out there. We need you guys to call in.
Come on,
Take that as a compliment.
Take that as a compliment.
It's a huge
Right.
compliment coming
Yeah.
from him.
Yeah.
Okay, what's your philosophy on how you deploy your capital allocated to private investments? Are you out there looking for certain types, or more responsive to what comes across your desk?
I am much more responsive to what comes across, what comes across our desks, and who the and who's making the show. So I'm actually, I don't have a mechanism for. I'm not. Scott and I are not a venture firm. We're not a private equity firm. We do not look for.
I would say you don't even have time.
Yeah, and we don't have a mechanism for going out and, we don't have a team that goes out and looks for investments.
Or we don't have the opportunity for people to come to us directly. I mean, we have people who have sourced liquidity.
Yeah.
And that's how we typically invest. Unless it's a startup, we do have founders that will come to us, and we have done a handful of those.
Yeah.
But if it's a bigger deal, they're brought to us, and then
You have to find us. I mean, that's
Right.
We're not a firm. We're not
the
an
good news
investment
for those
firm.
firms is once they find you, they don't leave you alone.
Right.
So,
I mean, we're pretty public. So public in the sense that a lot of people. We've been around a long time.
Yeah.
And a lot of people know us.
Yeah.
So we get a lot of shows. I mean, multiple shows a week, and some are real reaches. But some are interesting. I got 3 yesterday, and I don't know if I'll actually meet these people, or I don't know if I'll take the next step. But I always listen. I always take a look. So basically, people find us, and that's the very typical way for private investors. It's very, we don't have a salesperson.
Right.
We don't have an analyst out there looking for us. And that's the job of that's what private equity firms do. That's what venture capital firms do.
and that's what you're paying them for if they bring you the deal.
Yeah. Yeah,
So-
we're much more, our approach is much more organic, and we tend to bet on a person, not on an idea.
Yeah.
Yeah, so.
Sorry. Making my faces because he's now in charge of the clicker, and I
have to be
don't
in
like
charge of the
it.
clicker.
Or how they say in Boston, the clicker. The clicker. How big of an account can I reasonably expect to be able to trade without the problems associated with scale? What do traders do with wealth above that threshold? Just buy stock, ETFs, bonds, and perhaps sell covered calls?
You know, that's a pretty fair question because we deal with this kind of all the time, especially with various customers all over the world. Some like private hedge fund managers and some private, very large investors are capable of managing, tens of millions of dollars. I would say for the average retail investor or semi-pro or even professional, it is very hard to manage an account that's over $10 million. It's almost impossible to manage an account in a active format that's over 25, 50, $100 million. It's almost impossible. But a $10 million account is really, really challenging. So question here of how big an account can I reasonably expect to trade? A couple of $1 million, but once you get over $10 million, it's very hard. That's all I'll say about scale. It's just not that much to do. The retail marketplace is great up to a few $1 million is really that's what I feel, especially with portfolio margin. I mean, unless you feel like taking a few $100,000 in risk every single day, you're pretty much going to be limited to a few million to under $10 million. And then what do traders do with wealth above that threshold? That's a lot of times people have other people that manage their money above that threshold. For me personally, and for what I've witnessed is, I think you buy stock, you buy short-term cash instruments, and you might buy bonds. You might invest with, a private equity firm. You might invest in your own business. We tend to put the majority of our money in our own businesses. That's my preference. But if you're going to buy stock, you sell covered calls. I mean, one of the features we're building on the new Lossdog software is the ability to tell people how well a job they're doing optimizing their own portfolio. Something we haven't talked a lot about the Lossdog platform, but you're going to see it on our software release, and letting people know if they're effectively optimizing your portfolio is something that's kind of really cool. Wealth above a certain threshold, I mean, it's a high-class problem, but sure.
Most definitely.
Stocks, bonds, ETFs, lots of different cash instruments, lots of private investments, invest in yourself, covered calls, all the above. I mean, what do you think, Scott?
I think it's a great answer. For me personally, it would be short-term cash, looking to buy some equities, but clearly not here. But totally agree. What's I think important is to make sure that the size is reasonable for whatever you are actively trading, and completely agree that as the account grows, it becomes much more difficult. So what somebody can do with a $5,000 or $10,000 or $15,000 account doesn't mean that you can do it with $1 million or $2 million account.
Yeah, I mean, it's hard. And we've seen some really big accounts over the years, and they're very much restricted to using SPX, or a few other products like that. I mean, there are enough, there's some big stocks nowadays, there's multi-trillion-dollar companies that are bigger than indexes. So you have things like Nvidia, and they can handle, Nvidia, Tesla. They have the liquidity to handle, huge amounts of capital, along with Microsoft and Meta and Google, and that little group of 7, 10
Talking
stocks.
about Nvidia, I heard an interesting statistic yesterday.
What's
That
this statistic?
that $5 billion, the market cap was bigger than the German stock market.
$5 trillion?
Yeah.
Yeah. Well, I mean, that doesn't surprise me.
Well, I mean, just think about one company. is bigger than a
Well,
country
how about-
valuation.
Yeah.
How about this? At $5 trillion, Nvidia has a bigger valuation than the GDP of every country in the world, except for the U.S. and China. So you're talking about, there's only 2 GDPs that exceed $5 trillion. And I don't even know, and I'm not even sure if China exceeds 5 trillion. I think it does now, but it used to not. I think they just recently got over that $5 trillion number. So you're talking about,
No, it's bigger. It's way bigger. GDP in 25 for China at approximately 19.4 trillion.
okay. All right. So, it wasn't, it just recently got up there. And it's just the U.S. and China. I don't think anybody else has a GDP that's bigger than 5 trillion. So, kind of crazy.
Robert from the Dog Pound
Yeah.
says, have you used the option binomial strategy using the 100-step method?
Have you used the option binomial strategy?
Binomial, sorry.
Using the 100-step method.
Binomial.
Scott, you're going to have to
Yes.
Google that for me.
I did.
I have
did
no
because
idea what that is.
I did. So a binomial strategy using 100-step method involves breaking the time to option expiration into 100 discrete equal intervals to create a highly accurate recumbent tree that models the possible future price of an underlying asset. By using 100 steps, the model approaches a continuous time distribution like Black-Scholes while maintaining the ability to price American-style options, which can be exercised early. Want the formula?
No. And who created that? Whose is this? It sounds like somebody's.
Mr. 100 step. Let's see if it says. I don't know. It says the advantage is flexibility. It can handle.
I know. Who created it? Nobody.
Let's
Okay.
see.
Well,
I'm
all-
sure. I don't know who
researching.
created this.
So, Robert, all I will say about this is.
Oh, here. Developed in the 1970s by economists
Go.
John Cox, Stephen Ross, and Mark Rubenstein, Kenny's dad.
Oh, there you go.
Oh.
It's funny. So, Robert, obviously, you asked if we've ever used it, and the answer is I didn't even know what it was. So, no, I've never used it. It sounds.
But wait a minute. Let's talk about this guy. Was he the doctor or the car salesman that did this every minute in the SPX?
Oh, the Uber driver?
Oh, he's an Uber driver. I thought it was one of the other ones. But that would be this.
Similar.
I mean, it's not 100, but it's whatever.
Similar.
He did it every minute. So,
No,
If
he did it
if
based on
anybody's wondering
price.
how many
He did it
minutes
based on. He did it
What's
based on
that?
price movement. I think it's based on price movement.
Oh, I thought he just did it every minute. So
No.
there is an insane rule in the options world that it's the 390 rule. So 390, it's a professional rule, meaning, and this is really, really hard to violate, but if you don't have to fill, but if you enter 390 orders a day on average, over a month, on average, over a month, you are flagged as a professional trader. So what that means is your orders don't get customer preference. You go behind retail. The reason for 390, the reason I'm saying this is, and don't worry, it's so impossible for somebody to get there. In the history of Tasty, we had 2 people violate it.
Wow.
But there's 390 minutes in a trading day.
Oh, that's interesting.
So if you wanted to break it
That makes
down,
sense.
yeah, if you're going to break it down to doing it in a trading day, this, whatever this is
Well, I
called.
have entered.
100-step
I have entered.
Method.
I have entered over 300 or 350 orders in a day, but
That's really hard.
No. Just talking about entering orders, not fills.
Okay.
But a lot of them were canceled.
So they'd have to be filled, the 390?
No. Because what they don't want is market makers doing this: buy, sell, cancel, fill, cancel, kill, cancel,
It's
fill.
really,
Oh, got it,
it's
got it,
really
got it.
hard. But I do also have a friend that entered, that they got over the 390 limit once, but it's okay because you have to
Wait,
average
over
it.
the course of a month?
No.
Or
one day.
One day doesn't matter. You could do.
I know. I just said.
Yeah,
I
you
know.
could do 2,000, 3,000, just so long as however days in the month there
Yeah.
are, you get 390 times that, less
Yeah.
one.
Well, anyway, the 100-step trade. I don't like the philosophy behind it. I don't really hate it. It's just it's really
It's a lot
hard
of work.
It's really hard to implement that kind of thing, and you need
I mean, you could do it through an API.
you need a certain discipline that I don't know that I have, and I've never
Don't, and neither do I.
I've never been like a bot-like trader, so it's kind of a challenge for me, or it would be kind of a challenge for me. I don't know that I've ever done it or could do it. Yeah, there's another email in the or another
Yes.
chat that came in the dog pound, and if you don't want to call in, you can definitely enter whatever you want into the dog pound, and we'll read it on air. Because I know nowadays, I mean, my kids, they text me.
I text.
You text?
Yeah.
Scott, your kids text?
I mean,
They actually,
to
I
be
do
fair though, I
talk
do
to my.
call too.
I do talk to my kids a lot, but it's unusual. You know, I think it's. I mean, I know they like to text others. You know, phones.
Yeah.
Like, it's so funny that we refer to this as, you know, as a phone, when the
Right, it's
reality
really a
of it
mini
is how much you
computer.
actually use that device
Right.
for talking to somebody,
Right.
right?
So I'm cleaning out my basement the last couple of days.
Oh, wait a minute. Are you pregnant?
And don't ask
Are
me
you,
why.
are you
He's
nesting?
nesting.
I'm vested. I just want to get rid of crap. I have so much shit. I just want to get rid of
I
stuff.
like that.
Yes, it's good.
So I have boxes that I've moved twice that are like
Never opened.
never opened from like the 80s and 90s. They're just full
See,
of papers.
I'm
I
sorry,
think
what?
you
Yeah.
miss your opportunity to throw those away without opening them, because I think if you move them and then you don't open them before you're moving, you can throw them away. Once you've moved again, now I think you owe it to yourself to open those.
So
and see
I
what's
have been. So I've thrown out like two massive garbage pails full of stuff in, you know, like city garbage containers full of just papers and everything else. It's gross. Anyway, I'm getting rid of everything.
Any hidden gems?
A couple of hidden gems.
Hey, there you go.
I found my coin collection.
Oh, cool.
How about the stamps?
Oh, I already got my stamp collection. I found my coin collection.
Please tell me that you found the Charlotte Hornet old shorts.
No, I did not.
Oof.
I found
UNLV T-shirt.
no. I found two. My point was, I was going to say is with the phone. I found two
Oh,
iPhones.
No. Oh, no.
They're like really tiny.
Okay, but you didn't throw them in the garbage, right?
No, I
That
kept
would be
the
worth
iPhones.
something.
No, they're not worth anything.
No, but at least let's recycle them appropriately.
Oh, trust me, somebody would want those. I guarantee you.
I found two of the first edition iPhones.
That's cool. I remember you had
I have
those.
thrown
I mean,
out.
if you had those in the box.
No, they're not.
That'd be
The
worth
only
something.
one thing I have in the box that I still save to this day is
The original, yes.
the limited edition
That watch.
Platinum Swatch watch.
Oh, cool.
We gave that to Levi. He actually wears it.
Why didn't you
I'm
wear
pro-
it?
He wears it.
Yeah, he wears it.
So
Well,
he,
it never moved.
So
We
you're
bought, we bought that watch. It was a limited edition platinum Swatch watch that they had.
what year do you think it is? What year do you think it is? Because I looked it up.
You need to wear it.
95.
Yeah, you're pretty close. 94.
Oh, cool.
94.
The year I
Okay,
moved
so
to the US.
Swatch came out with this watch. I think we paid
$1,400.
Oh, I was gonna say we paid $2,200.
I think we paid
$1,400?
either $1,400 or $1,800 for it. I don't
Okay,
remember.
1,800. They priced it in the platinum pit. They had this whole show.
Yeah.
They delivered them to the jewelry stores in a Brinks truck. It was like, oh my God, we
Oh,
got to
my
buy these.
God.
It weighs a
They're gonna be
ton.
worth. They're going to be worth
You
a
should
fortune.
wear it.
I
They
don't
never
wear
moved.
watches.
I want to see it.
I'll
a
bring it
cool-
in.
Yeah.
It's a cool watch. Oh, so, excuse me, but it does come with little white gloves. So if you want to take it, you got to hold it with the white gloves.
Oh.
I don't have those anymore, but I have the box that came in. I have everything.
The white box, and it comes in an acrylic case. It's
yeah.
nice.
Oh,
it's
that's
it's a
cool.
blue. It's got a blue watch
Strap.
thing. And so I
Called
looked
a-
it up. I
What
looked it
kind
up
of
online.
strap, though?
I don't know.
It's worth the
Leather?
same that we paid for it.
No, it's
What's it
worth it's worth like $2,300.
Is it?
Yeah,
You looked it up
yeah,
on eBay?
yeah.
Cool.
Okay, I found a couple other things that are actually pretty interesting. I found a 1995 Jordan card in mint
Wow.
condition. I don't know if it's worth
Wow.
anything. Like I have found my Thurman Munson 1970-ish. I don't remember what year he died, but I found my Thurman Munson.
79, 80.
No, I think it's before that, like 72 or something. I found a Thurman Munson card.
79.
He died in 79?
It
No
says
way.
Born at 4. Okay, Thurman Lee Munson, born, I love you, born June 7th, 1947, died August 2nd, 1979.
There you
Wow.
go.
It had to be. I thought it was before that. Anyway, I found a
You want to tell
Thurman.
me I'm wrong?
No, it's possible you're right. I found a Thurman. I found my Thurman Munson card. It's not in great shape.
It's a plane crash, wasn't it?
Yeah, yeah.
Oh.
And what else did I find? And I found a Sammy Sosa card.
Oh, wow.
Oof.
Quirky.
He died. He was flying the plane.
Yeah, he was flying the plane.
While practice landing. Oof.
Yeah, yeah. But I found a Sammy Sosa card. It's not worth anything.
Quirky.
Maybe the Michael
Quirky.
Jordan card is, but I found some cards,
Sure it is.
and
Michael
that's it.
Jordan.
I was looking for the ticket for that you and I got from the when we saw Cal Ripken play in the game that broke the record.
I think I gave my ticket to a kid that night.
I don't have it. I couldn't find it anywhere.
Yeah, I think I gave it. I think
Wow.
I gave it to somebody.
Those
that
are
was-
some nice
that was
little
an event.
treasures you found.
Yeah, and I found a Brian Urlacher signed something.
Oh, wow.
I don't know what year it's from.
With or without hair.
No, it's like a little mini helmet or something. Yeah, it's funny with the stuff we just throw in the,
Yeah.
just
Yep.
toss into a
Into a
whatever.
miscellaneous box.
Yeah, miscellaneous.
Oh, those miscellaneous boxes and
But I wonder
drawers
about those
drive me
iPhones.
crazy.
Anyway, that's what brought me up to say this. But let's see what do you have, Rico?
No, Rico's
No.
from the dog pound.
Yeah, from the dog pound.
Says, has there been any research done on correlation between Bitcoin and NASDAQ as being a potential pairs trade, or Bitcoin being a leading indicator for tech risk on markets? What do we think?
Well, I mean, first of all, there's I don't know that you need research because there is a correlate. Bitcoin has a correlation to the S&P 500, and NASDAQ has a correlation to the S&P 500. So that relationship's easy to figure out. Is it a pairs trade? I don't think so. I mean, of course, anything could be a pairs trade.
It's just a question of whether it really is.
Yeah, I
pairs
mean,
trade.
the challenge between Bitcoin and NASDAQ is figuring out the ratio. You have to use futures, figuring out the futures ratio. I guess a micro Bitcoin contract is 1/10 the size. So Bitcoin is actually, this isn't too hard. Bitcoin is trading for let's say 100,000. It's 90. What is it? 90?
Bitcoin right at 90,000, yeah.
90,000. So Bitcoin's trading 90. So 9,000 is one lot of a micro, and then a one lot of a micro NASDAQ is 5,000. So basically, it's 2 micro NASDAQ to 1 micro Bitcoin if you wanted to trade it. If you adjust for volatility, maybe it's 2.5 or 3 NASDAQ to 1 Bitcoin micro. Man, I don't love that trade.
Yeah, me either. I would make the trades on their own, just independent if you like like one or the other.
I
or
mean, if
don't
you're
like
thinking
one or
that
the
trade's at an extreme, you want to sell the NASDAQ futures and buy the Bitcoin futures because that's the extreme it's set up as right
Yep.
now.
Got
Yeah.
it.
Yep.
Okay, our next letter says, and you'll have to give me a chance to say all of these. We've started pitching one company, testing the waters with no real nibbles. We get the sense that our weakness is speaking the language of business and presenting metrics like burn rate, runway, customer acquisition cost, lifetime value cost to FDA approval, and exit multiple of earnings before
EBITDA.
interest, taxes, depreciation,
Depreciation, amortization.
amortization. Convincingly and in line with investors' expectations. Is there a resource or tool that you've used to evaluate businesses in this manner?
Yeah, she's called Christy Ross. I mean, we have had, CFOs and people that we've worked with for a number of decades that this is basically something that, they do and do really well. I personally don't care about I don't care about any of this stuff. I mean, private equity firms will, CFOs will, people analysts will care about a lot of this stuff. I mean, I don't think I've ever.
These are not things we focus on, let's say that.
Usually we're investing way before we're talking EBITDA. Usually
Correct.
we're investing, we're much earlier stage investors. And so, I mean, usually there's not really necessarily I'm sure there's plenty of online resources, but for the most part, this is what your CFO's job, or this is what usually you'll have a deal analyst or somebody, like when we were bought out by TD, we had deal people looking at everything. Tasty we had our own internal deal people. Thinkorswim had our own internal deal people, like our CFO and a whole team of people to look at deals. Scott and I mean, we don't look at.
Not our wheelhouse.
Not our wheelhouse. I mean, what we'll do is we'll bring a deal, to our own team, and we'll say, hey, take a look at some of this stuff and make a case if we like them.
Yeah, so to his question, is there a resource or tool? So have you heard of anything out there? Should he,
I'm sure there's.
contract somebody?
Well, I'm sure there's lots of tools out there.
These would be things that any fractional CFO could do this.
Or any analyst.
Yeah, if they're given proper inputs, it's going to be up to them to say, what they think the cost is going to be of acquiring a customer, the long-term value of a customer, et cetera, et cetera. But any fractional CFO could put this into a presentable spreadsheet without an issue.
Yeah, we've always had really smart, CFOs and CEOs that have, CPAs and that kind of stuff on our team.
Right, but it can be outsourced.
It can be, but you're not going to outsource, you want to keep all deals you're looking at to be relatively quiet.
No, but I think what they're saying here is they're presenting.
Right.
So they're presenting it. So it would be reasonable for them to outsource, to bring somebody in to help them to put their
help them with
presentation together.
yeah,
This
right.
isn't for them doing
I'm
an
sorry.
analysis
Yeah,
of a
yeah,
deal.
yeah.
Right.
Yeah, I'm sorry. But here's what I'll say about that. If you're presenting all these things, you better be presenting to some private equity firm or some venture firm that cares about this stuff. If you were presenting to me, you'd have lost me at hello.
Yeah.
I don't really care. I might ask you what your burn rate is, or, I might ask you other questions, but I don't care about any of this stuff. I mean, I just don't care. It's not that interesting to me.
Okay, well, we have an answer. We have someone on the line. Let's take Beth from Iowa.
Beth.
Hi, Beth.
Hey guys, this is hey Tom, this is Beth from the Beth and Bo show. I always sign myself Beth and Bo because I met you in Houston with my son.
Oh, okay, cool. Cool. Yeah, I remember.
It was a great. Okay, well I always do that because you know everybody, and I don't expect you to remember me, but I'm also Gen X and not afraid to call in and talk to you guys.
Yes, we
Gen
Get
appreciate
these
Xers.
younger ones in.
Yeah, we
Saul,
appreciate
are you
some
a Gen
Gen
X?
Xers. Thank you.
Oh, yeah. Gen X
That's
all
what
the
I
way.
thought. I thought you and I were the same type of vibe. But hey, okay, I did type in the dog pound or the text thing, whatever, last week because Tom and Scott, I have never met you, and that really sucks. But you guys were my safety. It felt safe when my money was at tastytrade, and I just got very freaked out when both of you left, and it's is my money still safe there? I just I just needed to hear from you guys. I mean, both of you, Scott, whether you know it or not, you guys have been my mentors since
I
way
appreciate
back
that.
early Invest Tool days. You guys have been my business
Wow.
mentors. Totally.
Wow.
Wow.
Your money is safe.
Your money is totally safe.
Yes.
So you have to remember, and I appreciate the call out, but remember that Tasty is not self-clearing. So Tasty clears through a business in Dallas, Texas by the name of Apex. So Apex is the one that's actually holding your money, your assets, your securities, futures, crypto, whatever it is. So It has nothing to do, at the end of the day, it has nothing to do with Tasty. So, I mean, I'm not going to comment on the customer service, et cetera. That may have changed since we've left. But as far as your money goes, you're just as safe today as you were when we were there. So I would not worry about that at all. I mean, I still have my account there. Tom still has his account there. Don't even think about it.
Yeah, Beth,
I'm all better now.
the brokerage
I'm all better
business,
now.
just so everybody listening knows, I don't believe that on the security side, there has ever been any brokerage firm that has gone under. There have been some futures firms that were under a different regulatory body that I can think of, you know, back in MF Global and
oh my God, what was the other one? It was
Chicago-based. We were
yes, it was Chicago-based.
Anyway, I can think of MF Global and a few other ones on the future side that were subject to some fraud and had some issues over the last few decades. But there has never been a securities firm that has cost a customer a single penny. And I mean, which is a really good thing to know. And the way the system's set up, and with the central clearing, and with all the guarantees and everything that's out there, and the Refco, you're right. And with the way everything's margined, Beth, yeah, your money is, I mean, honestly, I've always felt my money's way safer at a brokerage firm than it is a bank.
So, and also an important point here is customer assets are segregated. So they can't take they're limited as to what they can do. If you have stock, for example, that's fully paid for, they cannot touch that unless you agree to a fully paid for stock lending program. If you buy stock on margin, then there's a rehypothecation agreement and they can lend that money out. That's a profit center for them. So if you buy stock on margin, you are at risk for that stock being lent out. Again, as Tom said, there's never been an issue from a counterparty risk factor where that hasn't been repaid. But if it's fully paid for, they can't touch it.
Thank you. See, I'm all better now.
There you go, Beth.
A simple yes or no would have worked, but I love
yes. The answer is yes. You're safe.
No, I love the insight behind it because I'm like a learning addict. I'm addicted to learning. I just figure that I'm weird that way. So,
no,
listen,
that's all right.
Guys,
that's not weird.
I'm so excited for you, and my kids are, they're
you're
young.
You're gonna love the stuff we're coming out with, Beth. You're gonna love it. It's just,
it's just getting the younger generation, like even like what you guys are saying, texting, phone, all of that. It's so annoying. You can lead them to water, but you can't make them drink, and it's just like, Jesus, listen to these guys. I mean, they're just listen. So we're getting there.
Cool. Thanks, Beth.
I'm all in. Thank you.
Love it, man.
Bye-bye.
Thanks.
Thank
Bye.
you. Bye.
Yeah, that's good.
Yeah. So nice to hear.
Yeah, we've met before at live events, which is
Yeah. All right.
great.
Next
Cool. Don't
up.
be shy out there.
Ooh, my click
989.
is not working.
989 Lossdog.
You broke it.
No, because you
No, you
are
broke
messing
it.
with my clicker.
No, you broke it. All right. With the S&P 500 near all-time highs and implied volatility structurally lower, how should active options traders adapt when the traditional edge in premium selling is compressed? Do you favor trading smaller, wider, longer dated positions, or selectively reintroducing directional risk? Avo. Or Avo. Sorry to butcher it.
Avo, like an avocado.
Sure.
Like an avo toast.
Okay, our friend, we got this. We got it.
Speaking of avocado.
Answer, please.
Speaking of
boy.
guacamole, I just want to go on record as I bought some over the weekend. And have you ever bought avocado and then you open it up and it's rotten?
Yes,
I have a trick.
You have a trick?
Yeah.
What's your trick?
So you only
Throw
buy,
it away and get another one.
No. You only buy the avocado at the store if it has the little stem still stuck to it. And you gently lift it,
This
and
is
you can
pre-made guacamole.
Oh well.
I'm not making my
How
own
do you
guacamole.
buy pre-made guacamole and you don't see that it's black?
It wasn't. It would look perfect. And it was inside the date. When I opened it up, it wasn't good.
How long did you have it in the fridge? Okay. Never mind.
6 weeks.
Fridge. You got to start. How long was it in the freezer before it was in the fridge?
Exactly.
A day. It was one day. Anyway,
But you opened it.
I opened it. It was no good.
No. You opened it and then the next day was no good.
No, I opened it and it
I
was no
don't
good.
believe it.
Oh my God. Avo, sorry to change topics here, but listen, S&P, with the S&P near all-time highs, I think you've actually laid this out in a really good format. Implied volatility is always going to be structurally lower. Market's high, volatility's low. That makes total sense. And active option traders have to adapt when volatility is really low because the edge in premium selling does get compressed, it contracts. There is a ton more, there's less daily risk and more outlier risk. You have your biggest losses when implied volatility is super low because you get complacent and you don't realize that there's the potential for an outlier loss. And then, of course, you also get whipped on a day like yesterday to today. You know, you're down 150, then you're up 75. You know, that's a lot of whippage there. But the answer is you've nailed it. We do favor trading smaller. You want to trade larger when there's more opportunity and smaller when there's less opportunity. You want to go wider. You can replicate higher volatility by going longer dated. The short-term stuff has a lot more risk. And you can selectively reintroduce directional risk because you're taking less of it. So when volatility is low, you're taking less directional risk, theoretically. So the answer is you've actually articulated that as well as we could.
Right.
I don't know if Scott wants
There
to
you
add to
go.
it.
Yeah, no.
Scott?
It's completely agree. He said it very well.
Yeah, good job, Avo. You pretty much nailed it. I mean,
Nailed
if you were teaching the class, you know, that's your grad school right there.
Great. All right, next. How many years out of the last 10 have you beaten 4x risk-free rates with only trading? James.
Oh, that's a good question. How many years out of the last 10 have you beaten 4x risk-free rates? Well, let's determine a risk-free rate number because the risk-free rates in the last 10 years,
Win zero for a lot of them.
yeah, they were zero for a lot of them, so that's not really fair. Because then you only have to make, into zero. So let's just say risk-free rates have been, in the neighborhood of, let's say 4%. They've been as high as 5.5. They've been as low as 2.5. So I don't know. I mean, lower than they've been to zero, but whatever. So let's say 16% plus. Is that fair?
Scott?
Reasonable. Yeah, that's fair.
Yeah, 16.
I mean, 14, 15, 16%.
Well, I don't ever talk about, our return on capital because I've felt over the years that's not what we're about. And if you've watched us for the last 25 years, I don't think I've talked about, I've talked about how many trades I've made. I've talked about like the percentage of winners we've had. I have purposely never talked about, actual returns because I don't want to get into he said, she said, or hey, this is what you should be doing. And I also don't know, I think sometimes I take a lot more risk. And so I will either make a lot more money or I won't do as well as somebody else just because of all the risk I take. And that's just, that's a preference. But I would say that the answer to your question is a majority of the time. I'm not going to give you a specific, actually I don't even know the specific number on top of my head because I didn't see this question ahead of time. I would just say a majority of the time.
Okay.
Fair.
Okay, I mean, I don't want to get into specifics. We don't manage money, just to be really clear. So we don't manage money, and so we don't audit our returns. And we have no reason to because we don't ever say, we only manage our own capital.
Right.
So we have no outside capital or anything like that. So there's no reason to. I'm hoping that in the future we will, again, post our own trades onto our platform. On the new Lossdog platform, we are posting our portfolio, but we are not posting our trades right away. And then as the year goes on, we might post some trades. But we won't post returns.
It's going to be super exciting.
I hope so.
Yes, of course it will be. Okay, what other careers or startup business opportunities for a 51-year-old woman, elementary science and math teacher with 29 years experience do you recommend? If a startup business, where is the best place to get funding? Strong employment record and work ethic, says Ron.
Ron, you don't sound like a 51-year-old woman. Something is missing here.
Something is amiss.
Unless it's Ronnie or something.
Maybe.
Could be. Well, I mean, this is, I'd almost be better off deferring to you on this question.
Oh, dear.
That's your wheelhouse.
Not really. I don't have a startup business.
No, I'm just saying, but, you're
It's a tough question.
It's
Of
a
course.
tough question.
I mean, we
but
don't
definitely
listen.
we would
There's
say
not
maybe
a- there-
start investing, right?
Not a
Like,
lot of
start little,
information
start
here.
investing.
Yeah, I mean, they've got to be good at math, if they're a science and a math teacher,
Honestly,
obviously.
yeah. Right.
So, but don't know what the passions are.
Maybe start with a little trading account.
Yeah, have
Well,
they ever
I-
had a side hustle?
I would answer this differently, and I would say, with a strong employment record and a strong work ethic, 51 years old now 51 is like the new 35 or 37. I mean,
That's right.
it is. It's young. And with a background, with a strong employment background and a really good work ethic, I would say that, science and math it's a huge skill set as
Yeah.
a foundation. And the 29 years experience, like that would be really valuable to, a firm like us. So I would say it's probably not going to be a startup, because I would have no idea what you're interested in from a startup side. But I would say that with that experience, as a career, like if you're pivoting from being a teacher to something else, I would think that, there's a lot in the world of basically everybody needs people to understand science and math. I mean, my world's finance, and I would think in the finance world, there would be some
Maybe
opportunities.
But
an independent
I would
contractor?
No,
Then
working for somebody, working with
No,
somebody.
but
for somebody.
the question that they're asking is, if they were to start up a business, where would the best place be to get funding? I don't know if this still exists in the world we live in today, but I know in years past, there have been, opportunities for funding for women-only businesses.
That's right.
So check wherever you live, check your municipality or the biggest city around you, and just say, are there any grants? Because that would be a good place to start, because if you knew that if you presented them with a reasonable idea that you might get funding, to some level, that might give you a push to say, great, I could get some money if I go do this, and here's something I've always wanted to try. I don't know if that stuff still exists. I know it has in the past.
I'm going with the what
That's
other
a really good
careers.
suggestion, Scott.
I'm going with the what other careers rather than the startup piece to this.
Sure.
If it was a startup business, I think you need to do it through your own circle of networking and friends and people that you've built up relationships with over the years for friends and family, or you network within some other, career
Yeah, but
that you're getting
you
into.
never know where there's potential funding available again for, something like a women-only business. I remember, JJ, he went to school and played baseball on a scholarship that at least part of it came from Colonel Sanders had left money for
Right, you
people who
just
wanted to
don't
play
know.
baseball. So
Well,
there's
of all the stuff
bizarre
that's out there.
stuff. There's
Yeah.
bizarre
I
stuff out
understand
there.
that. I understand
Yeah.
that, but that's very tough, and it's hard to find.
But they're asking where
don't know,
to
nowadays.
get funding. So if they can't do it themselves or with the friends and family, what I'm just saying is, take a look out there. There's crazier things that have happened.
You
We
need
need to do the
experience in the work.
research.
You need experience in the workplace too. Coming from the educational side, you need workplace experience before people are going to invest in a startup. That's all I'll say. That's my strong
2 cents.
recommendation. Yeah, network first.
Okay.
Yeah, and we can go to one last question before we wrap up with a lot of market talk, because I got a lot of stuff to say about the markets.
Okay, so quickly, is Bitcoin a wise investment to continue to hold, and what percentage of your portfolio do you recommend allocating to Bitcoin? Timothy, we get this one a lot.
And also depends how, where you are a little bit, maybe Tim, in your life with respect to, how much you believe in the world of digitization and digital assets. I think that if you're, I think Bitcoin is a wise investment. Bitcoin, ETH, any kind of cryptocurrency is a wise investment as long as you keep your position small. All the research we've ever done about having a small percentage of your portfolio in digital assets is proven to be incredibly positive and adding lots of, positive returns, lots of alpha to your portfolio. For me personally, it's less than 1% of my portfolio is in digital assets. I have had a higher number than that in the past, but on the last rally, we sold some out and I didn't reload everything. But I'd say I'm just under 1%, but I'm definitely long. And I'm long Bitcoin, I'm long ETH, I'm long Solana, I'm long Litecoin. So I have what else do we have? I have some other stuff. I can't remember everything, but at least 4 or 5 cryptocurrencies. And I think it's a wise investment. I think it's a wise diversification. I am definitely a buyer if they go lower. I think they're still too high. But
Yeah, I don't have a position. I think I agree with Tom. It's reasonable to have small exposure to it. Again, if nothing else, from an engagement standpoint, I would look to be a buyer. Again, small, on any sort of, if there was a dramatic pullback.
I mean, just like anything else. I mean, there's no difference. I mean, the Bitcoin marketplace right now is the same. It's smaller than the Nvidia marketplace. So, I mean, the whole digital asset marketplace is under $5 trillion.
Yeah, but the difference is you're not getting, Nvidia is typically not moving 10% a day or 5% a day, which clearly crypto can.
It's funny. The Bitcoin used to have a volatility of 90%, 95%. So it had almost 4 times the volatility of the S&P. But Bitcoin volatility is down to in the mid 40s now. Last time I checked, it was I think 46 or something. I don't know what it is today. But it was mid 40s, low 50s. And it's not that much different than the volatility in Nvidia and Tesla. So it's not, what is it?
Yeah. Well, if you're looking, sorry, 1 second.
I'm guessing it's.
If you're looking IV forget January, for February IV for Bitcoin futures is 69, but for March it's 45.
Yeah, I was going to say 69 is way too high for it. 45.
And Tesla March vol is 49.
Right. So when you look at, I'm just using an example, but something like Tesla and something like Bitcoin.
Nvidia March vol is same thing.
Yeah. So that's what I'm saying. So the reason people used to buy Bitcoin when it was cheaper and it had really high volatility is just because you had a lot more upside. It was asymmetric upside relative to risk. Now with it being the same volatility, because volatility is just another word for expected move. So it's the same volatility as Nvidia and Tesla, then there's no difference between all of those from a diversification standpoint. So yeah, you just do it. It's just a diversification. And so Tim, I think it's wide, but the percentage of my portfolio that's long is very small right now.
Let's take one last call.
Yeah, sure.
We have
let's do
Shay
it.
from Des Moines.
Another Iowan.
Unless there's
I'm an Iowan.
Des Moines somewhere else.
Another woman from Iowa. Shay, what's
Yay.
up?
Hi.
Hi.
Hey. Shay. Yes. Okay. So funny. I'm actually Beth's daughter, so I've been listening. She's been hounding me to listen to you guys, and I heard her, and yeah.
That's
so hi.
awesome.
Hello.
Mother-daughter duo. Love
it.
this.
Yeah. Here we are.
So what's
hi,
up?
Tom. Hi, Scott.
Hey.
Okay. So I wanted to ask. So I am just beginning. So I mean starting. And so I have no capital. I've got no assets. I was wondering, what are the first 2 things that I should actually do and not think about, but put into action to build? What are the first 2 things you guys did that I should do to build where you are today?
Oof.
Shay, are you asking from a business standpoint?
I'm asking yes, business, yes, personal, all of it. I mean, because I'm just starting from the bottom, guys.
Could write a book, but yes. A few takeaways?
I mean, that's a lot. That's a lot to unpack. So, it's interesting because everybody, all of us, you, me, Tom, so anybody listening, anybody, we're all products of just our experiences, the things that we have done, our history. So everybody's going to go through it differently. For us, for whatever reason, Tom and I have been really good working together on the brokerage side. Not to say that if we were focusing on something else, which we are right now, with Lossdog, very different, that it's not going to be successful. But this is, I don't believe we could have done this. Well, first of all, the tools that exist to do this, 20 years ago, but this wouldn't have been something that we would have looked at and said, oh yeah, let's go do this. We didn't have a foundation for it. So we have come at this from our collective experiences. So I don't know what your experiences are, but I would say just try to build on them. So say, take what you have done, things that you're proud of, things that you think really have made a difference for you, hopefully for others, and run with those and see where it takes you.
Okay.
And
Well,
would you say
great.
that you have fun with, right?
Shay, something we say all the time is we spent like 20 years grinding it out and trying to figure out what we were good at and learning the business before we started building outside businesses, which then took the next 25 years. And so like this has been, our successes weren't exactly overnight. It's been like
Correct.
a 4+ decade process of building stuff up, which is super cool, but it's nothing that comes easy. So it's just like you learn, and then you kind of start to figure things out, and then you just try to take it to the next level. And I think that that's a really good model, but it's not an overnight success.
Sure. Totally get that. Well, thank you, guys.
Hey, good luck.
Thank you.
Thanks-
Call us
thanks for calling.
again.
Thank you.
Yeah, for sure.
Yep. Bye.
Have a great
Bye.
day. All
All
right,
right.
we're going to go to market talk.
Yes, I'm not happy that the SPUs are up 75 because I got a little short before the before the show started, and I'm also not happy that MU is up 24 because I got a little short that this morning, and I'm just not looking at my P&L right now to see how painful that is. Plus, the NASDAQ's up 350. It's funny. It was so heavy early this morning. I got a little short in NASDAQ too, and it's just exploded. The good news is gold's still up 85, but silver's down $1. So the gold-silver ratio today's the first day it's really come in nicely. That's the positive side about today. Scott, what else do you got going on?
I'm looking to see where that is.
I'm going to guess it's low 50s, maybe 51, 52, in that range. Should be in like $1 today, so
5182.
Pretty close.
Yeah, no, I've got the same thing. Silver down a little bit. SPUs, it's funny. I thought that there was going to be a little bit of a rally today. I didn't think they were going to rally back half of the move.
Yeah, I thought they were going to rally today. I thought they were going to rally today, and when I came in short, I covered on the one down move early on, and then I reloaded, and that was the mistake. Let's see what else.
Chips are up. You got AMD up 19, Micron up 24. As you said, Netflix down 3, Nvidia up 4.5, Oracle down 5, Reddit, can't trade it, down 9. Apple, that's one you've been saying looks to be relatively inexpensive.
I thought
compared to
AMD was really cheap. A week ago, less than a week ago, it traded down to 205, 206, 204 actually. And I thought it was too cheap and got a little bit long it, but not the right way. It's 250 today. It rallied $45 in like 3 days.
Traded 199 on the 12th. So 9 days ago, traded 199.
I don't remember that.
So up 25%.
Yeah, crazy. Some of these moves are crazy. Google's right back, but that was heavy. Yeah, the one nice little move this morning is bonds, which is helpful, but I don't know.
14 ticks. That's not.
I know
It's not anything crazy.
it's something.
It's
Hey,
something.
listen,
If you're
I'm
short the
just-
114 puts, it's good.
Yeah, that's what I'm sure of. I'm just trading. You know what? This is just like, we're just trading. I'm going to tell you this right now. I'm not looking to get long here. I do not think yesterday's sell-off was a one and done. And I don't think it was a one and done, yesterday's sell-off. And I still like the pot odds to the downside here. I'm surprised by today's strength. I'm surprised that people think a 2% sell-off was a buying opportunity.
I mean, on the news this morning, they're like, oh my God, could you please help us understand why the market sold off so much? I'm laughing. I'm watching this going, it was down 2%.
I saw somebody, I don't remember who it was, but somebody sent me a clip. It was one of my friends who's a little bearish. Sent me a clip, and the clip was some guy on some network, I think it was Bloomberg, saying, this is the best buying opportunity so far in 2020, in 2026. And I'm thinking to myself, you're kidding, right? Like one down day?
Right.
I didn't buy anything yesterday. I didn't sell anything, but I didn't buy anything. I'm not so, I don't think this is
You didn't sell anything?
well, I haven't sold any, I haven't really gotten.
Okay.
We're at 6,900. We were at 7,000 just, 2 days ago.
Yeah,
Yeah.
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 So let's see what happens here. I would like to see a little bit more of a washout, at least 5%, which is 5% would be 3,500 points, so maybe 6,650 in the S&Ps, and we're still at 6,900.
I love the 5%. Now that's a washout.
It's not a washout at all. It's
It's a move.
it's more than 2%.
It is more than 2%.
Yeah, I mean, I would like to see silver correct by $10. That would be nice for us. That would be my. I mean, I can't believe I'm saying that silver at $82 or
Would be a great
$83
buy.
would be interesting. I thought 62 would be interesting. 82 would be at least helpful.
Yeah.
All right.
All right.
That was good.
Okay.
That was
I
good.
just want to remind everyone to go check out our newly launched Unleash segment on Lossdog's YouTube channel and send us your feedback and questions and all of that.
Sign up
We
for the
love it.
wait list. Listen to our personalized song from Slash.
Yes, join the wait list at lossdog.com. And you still have time until January 31st to complete the predictions form for 2026.
I brought you chili.
Oh, yay! Right, you want to talk about chili?
No.
All right. I'm going to have some. Yay!
All right. Happy Wednesday.
Happy Wednesday, everyone. See you tomorrow at 9
Bye.
a.m. Bye.